Hi traders, this is Steve here from Sure Trading again, coming at you with another one of our analysis videos. In today's video we're going to look at Rem Grow and see whether or not it's a good idea to invest in that company. Just before I start, as always, a little disclaimer that neither myself nor Sure Trading are registered financial advisors, so anything I say in this video should not be seen as financial advice. If you like the videos that we're putting out on this channel, please go down and click on the subscribe button as well as the thumbs up button. It just helps us to get the momentum going on our YouTube channel. And in the description below the video, you'll be able to get links to our website where we offer subscription service as well as a mentoring package. There's also links to our Telegram channel where you can get trading tips and advice, and also links to the Velocity Trader platform where you can download the platform either in a demo or live format and get going yourself. So let's have a look at Rem Grow. I'm just on their website at the moment just to get an idea of what they do. Rem Grow is a diversified investment holding company with the vision to be the trusted investment company of choice. Let's just go and see about Rem Grow. Originally established in 1940s by the late Dr. Anton Rupert, Rem Grow's investment portfolio has evolved substantially and currently includes investee companies across 7 platforms. Let's just have a look at what kind of investments Rem Grow has. Let's click over here. There'll be a lot of brands that you recognize in their portfolio. Under financial services, they have Rand Merchant Insurance and First Rand. They have Mediclinic, RCL Foods, Distel, Sigalo Foods, Industrial Total, Air Products, KTH, PGSI, Grindrod Shipping, Seacom, big internet company, and ETV is their media section, as well as business partners. So you can see they have quite a diverse portfolio. Let's go have a quick look at the chart and see what the technical aspects are looking like at the moment. Okay, just before I get into the chart, as always, I'm using the Velocity Trader platform. If you'd like to open a demo account where you can practice on the platform before trading, or a live account where if you just want to get going with the platform, click on the links below in the description and you'll be able to register there. So we're on the week chart, so each candle represents a week, going all the way back to 2011. As you can see, the picture's not extremely rosy. For the first couple of years, they went up nicely all the way to the top here, which was in Feb 2015 with their peak. And then ever since then, they've pretty much been going in a downward trend with this big drop down here. This was due to the COVID lockdown, and they recovered slightly only to go lower again. So if you have a look at their previous lows from back in 2011, they were around 102 Rand a share, and they've actually gone lower than that last year to about 81 Rand a share. They're currently slightly up, but this could just be another retracement before it continues down. But let's have a look at the fundamental side and see what that has to say about Rem Grow. So here's the page on Rem Grow. You can see their market cap is 74.9 billion Rand. In the last 7 days, they've gone down by 1.6%. In the last year, they've gone up by 40.6%, which is quite good. But let's have a look. As always, we look at their past performance to see if they are showing increasing revenue, earnings, and cash flow. So let's have a look at that. Okay, so right off the bat, they have a little thing here saying how's it performed in the last 5 years. It's down 47.1% in the last 5 years, which is obviously not a great sign to see. But let's have a look what the charts say. So their revenue was pretty flat for a good couple of years, all the way to 2018 from 2015, and there it started growing quite nicely, and took a dip here with COVID, and seems to be on the up and up at the moment. Their revenue is 65.8 billion rand a year. Their earnings, on the other hand, paint a bit of a different picture. They were also quite flat for those first couple of years, and then dipped into the red over here in 2019 with a minus 6.7% profit margin, and stayed in the red up until early this year, and then they've only recently come out of the red and are at a 5.4% profit margin. Their free cash flow has been pretty stable the whole way through, at around 3 billion rand per year. If you have a look at this over here, a little warning sign that they give you is Remgro has a large one-off gain of 1.1 billion rand impacting its June 30, 2021 financial results. So that's the reason for this upward spike over here. And they define a one-off gain as a non-recurring or unusual income expenses not considered part of normal business operations. So that's just something to take into account, that's not part of the normal business operations, that it went up like that. And Remgro has become profitable in the past, much to do with that big 1.1 billion rand gain. Next, we have a look at the debt levels versus its equity and cash flow situation. So let's go and have a look at that. So here on the chart we have the equity levels from 2015. They were at 71.5 billion. They went up to their peak over here at 122 billion, and currently they're quite flat at around 100 billion rand equity. Their debt levels have remained relatively low, which is a great thing. You can see that they've had a sort of 23%, 19%, 17% ratio of debt to equity, and currently they are at 15% debt to equity. So if you look at these notes down here, Remgro's debt to equity ratio is considered satisfactory. It's been reduced from 23.6 to 15% in the last 5 years, and it's well covered by its operating cash flow, and the interest payments are well covered, 5.8 times coverage. This chart paints a decent picture, but once we put everything together we'll have to make a decision. So let's look at the valuation of the company. So the website that I'm using, Simply Wall Street, doesn't have enough data to establish whether or not the company is trading above or below its fair value. So we can't have a look at the graphic thing that we would normally have in this box over here. But in this case, we will look at the PE ratio to establish whether it's over or undervalued, and has a 21.1 times PE ratio, which would be considered quite a high PE ratio, which means that the company is potentially overvalued. And according to that, it probably wouldn't be a great idea to invest in Remgro at the moment. Let's just go and look at the chart one more time to see if from a technical aspect you might want to invest. Let's have a look. So as you can see at the current area over here, we are potentially bouncing off of a resistance level caused by this move over here. So I would say if it breaks through this resistance level, there might be a potential for a short move up to around this area over here, but that would be considered more short-term trading than long-term investing. So if you're interested in the technical side of it, this could be potentially a level that you could look at around 140 if it breaks through that level. But based on the fundamentals, I would say that it's probably not a good idea to invest into Remgro as a long-term investment. Great, so now we've looked at Remgro, established that it probably isn't a good investment. Let's go and have a look at our little picker wheel to see what company I'll be looking at in the next video. There you go. The next video I'll be doing will be on RDF or redefine, and I hope to see you again in that video. Just before we go, please remember to like this video and subscribe to our channel, and remember all of the links to our services can be found in the description below. Thank you so much for watching, and we'll see you in the next one. Cheers.